What's up, you guys? Jeffrey Benson right here. I'm super excited to bring you to this brand new video. Today's video, I want to tell you the best pairs to trade as a newbie. This is beginners focused. If you're a newbie and because your mentor that taught you trading gold and you started trading gold, just so that you're going to fail, you're going to blow your account back to back, I want to tell you the best pair to trade as a beginner in this video. Make sure you like this video, turn on post notification, and subscribe if you're not yet subscribed, because this is the right channel for you where I get to tell you the truth bluntly. Let's go into this video. In this video, I'm going to be focusing on pairs that only beginners should start with. This does not apply to those who are already trading, who are already experienced. This is only for newbie. So that's why I said you shouldn't start with gold at all if you're a newbie. That doesn't mean gold is not a good thing to trade. But then it's important I explain what currency pairs are, since you are a newbie watching me in this video. Currency pairs are how International Standardization Organization is already have it fixed for all type of trader. ISO codes is a body that have already made sure these currencies are already fixed. Like we have the EUR used by the Eurozone, which is Euro. We have GBP, which is used by Great Britain, which is Great Britain Pound. And then we also have USD used by United States of America, which is dollar, right? So you notice that the first two letters represent the country's name, and then the last letter represent the currency. For example, US, United States, and then the D, dollar. Then we have AU, which is Australian, and D stand for dollar. We have NZD, which NZ stand for New Zealand, and then D stand for dollar. We have GBP, Great Britain, and then the P stand for pound. And then we also have CHF, Confederation Helvetica, which stand for Switzerland franc, and F for franc. Like that. We have many other currencies like JPY, JP Japan, and then Y stand for the yen. This is how all these countries' currency are made. Now, what is currency pair exactly? Now, in trading, whenever you see a country currency pair with another one, that's how it's fixed. It is already fixed by this body, which I mentioned a while ago, which is ISO codes. For example, we have Euro USD. What that simply means is, if you are buying Euro USD, that's simply you are saying that Euro is going to be strengthened and dollar is going to be weak at that particular time that you click on buy. So you are selling the dollar and you are buying Euro. It always involves the exchange of two currencies. For example, since we have Euro USD and the current price right now is 1.08, what that simply means is, if I'm to get $1.08, I only need to hand you over just €1. If I give you €1, you're going to be giving me $1.08. In that case, that means euro is higher than dollars at that time. That's how currency pair just really work. And all you need to do as a trader is for you to be able to predict the next price movement. How many people will it be increasing in a matter of time? So if you're able to predict that it's going to increase in about 50 people, and that did really happen, then you get to make money. And there are so many other criteria we look out for as forex trader to determine whether this pair should be highly traded by beginners or not. It's important to start with the currency pair that are less volatile, that has low spread, and are easily and commonly also traded. For example, Euro USD. As a newbie, there are things that you should consider before choosing any currency pair. I already have answers to give to you, but I just want you to also consider this if you still are head-bent on choosing another pair that are not among what I'm about to list. Here are the things to consider. Number one, volatility. You want to look out for the volatility of a particular currency pair, as statistics states that Euro USD is the highly and commonly most traded pair in the whole world. Why? Because Euro is popular as well as USD. In fact, any currency that is paired with USD, they are usually the most popular, because USD is almost what everybody is using as a standard. Is like a reserve for almost everybody. All right, so that's why anything that is paired with the USD, you just want to make sure it's a safe haven. All right, so like we have Euro USD, Euro GBP, Euro CHF, Euro AUD, Euro JPY, things like that. That's why it's important you first have to look at the volatility of each of these pairs. For me, Euro USD is a very good thing in terms of volatility. GBP is also very nice. USD JPY, USD CAD, AUD USD, they are always very nice in terms of volatility, because most people trade them. The more the volatility, that means more people are trading it, then the lesser the manipulations will likely come into that particular pair. Just imagine US allow people to be manipulating their currency. The chances are low that US, because it's a giant nation, they would never allow that. So that's why you check all the major currencies. As a matter of fact, they are all paired with the US. So that made them major currency. And the second thing is spread. Usually, pairs that usually less traded have the highest spreads. Like if you can check Bitcoin and BTC USD or gold, you see that the spread that are in it, they are always very wide, because they are less traded by more people, by people. So if we have more people trading a particular pair, that's more business for the broker, because it's a game of number. they have more people right there, then they want to lower the price so that as many people are in, they get to charge maybe tiny points that make them more money. But if it's a pair where it's not so much traded by a lot of people, for example, USD ZAR or USD TRY, Turkish Lira, or USD NOK or MXN, USD MXN, trust me, the spreads on all those pairs, they are exotic pairs, they are always very high because it's traded by less people. They have to make enough money from these people so that they can help them to execute their trade. So if it's like pair like Euro USD, most brokers have it at 0.0 spread, no spread at all. Some have it at 1 point or 2 points, whatsoever what broker that they are using, but it's always very tight because it is the benchmark at which most brokers use to advertise their services, that Euro USD is at 0.0. That's what they always say, or Euro USD is 0.1 because it's highly most traded pair. And next thing is liquidity. You want to check out the liquidity on the particular pair. And then the last thing I'd like to talk about is correlation. The pair that whatsoever you are trading with, the one that you're choosing, you have to check how is it correlated with the DXY, how is it correlated with the BXY, how is it correlated with any pair that you are trading at the index of that particular base currency that you are trading. So it's important. So before I leave, it is what you have known that in currency pairs, there's a base currency and there's a quote currency. The one that comes first in your left-hand side is what we call base currency. Like in Euro USD, Euro is the base currency, USD is the quote currency. So the one that basically stays on your left is the base currency, the one on your right is the quote currency. Because I'm facing the camera right, so it might be vice versa. But just know that the one that comes first is the base, and the second one is the quote currency. Now, to be direct to the point, the pairs that you should be trading as a beginner should be the major pairs. For example, Euro USD, GBP USD, AUD USD, USD JPY, USD CHF, USD CAD. These are the pairs that you should be trading because they are highly traded. It is less volatile, like their surprises cannot really happen like that, and almost everyone is also on it. It is easy for you to do analysis and get your trade out at each point in time. Please make sure you avoid these pairs that I'm about to mention. Number one, avoid NGN USD. This pair, avoid it at all costs. I'm not advising you, I'm warning you, else you're going to lose all your money because the spreads are usually very high. It's too volatile. Avoid USD ZAR, South African rand. Avoid USD TRY, Turkish Lira. Avoid USD MXN, Mexican peso. Avoid USD NOK. Avoid many of those other ones that are, don't try them at all because it is too volatile. You're a newbie. You deserve to be treated well. So please don't try these pairs because they are too volatile and their spreads are just going to kill you and send you packing. All right, just be careful. And also try to avoid some crypto pairs while trading Forex, like BTC USD. With some Forex brokerage, these pairs are usually very high in terms of spread. They are very high in terms of spread, so you just want to make sure to avoid these particular instruments whilst you are trading with the Forex brokerage. The purpose of this video is to educate you, to let you know that it's not all pair that you should be trading. The most important thing I want you to know is I would prefer that you stick to just one or two of these pairs. Understanding the patterns that commonly form during London session and New York session in each of these pairs will really do you more good than anything. So focus on one, understand the pattern that's pretty small. When I mean pattern, I've made a video on pattern. You can check this video where I talk about the candlestick pattern that is going to make you a crazy amount of money because it also made me a lot of money. So watch that video and use that pattern to trade any of these pairs I might trade, any two or just any one. Me, for one, I just do just GBP USD because that's what my brain can take right now. Thank you for watching this video, and I would love to see you around my channel. Please kindly subscribe, watch any of these videos that are around. I'll be popping up pretty soon. I would love to see you in the next one. Bye for now.